Hey, this is Mike Addis. Thanks for joining us on this video. Today we're going to talk about what kind of a company are you going to form. So the formation of the company that you're going to use in order to run your own business. Now, I use a C Corporation. What's a C Corporation? A C Corporation is a corporation that issues stock. So I have 100,000 shares in stock in the company that I own. Okay, so why did I form a corporation instead of a sole proprietorship? Well, a corporation separates me from the actual business itself. So the downside on owning a corporation like the one that I have is you have to do a tax return for the corporation. It's a sole and separate entity, as opposed to having a limited liability company or a sole proprietorship or even a subchapter S corporation. Those are all the income is going to come directly to you on your tax return. So forming companies have two issues for me. Now, there's many issues. You want to check with a certified public accountant or do some research on your own. I want to have a total and complete separation between me and the corporation. This is why I set up a C Corporation or a C Corp. It has its own tax identification number. So you can go to the IRS, irs.gov or whatever it is, and you can get your own special tax identification number on the computer immediately. You can also set up a sole proprietorship and get an EIN, employee identification number, instead of using your social security number. What's the reason for not having a C Corporation? Well, if you want all that income that you're going to have from running your company go directly to you on your tax return, then that's the way it's going to be. Now, for sole proprietorship, you have no protection. If someone sues you because of something, a faulty product that you sold them or something, then they can come right to you. A limited liability company is taxed the same way as a sole proprietorship, except you have more protection, which is why they came up with the limited liability company, because it limits your liability. That makes total sense. And as far as the subchapter S corporation, I think that might even be used more, and that has more liability protection. So I'm looking at two things. I'm looking at protection against someone suing me. So there's the liability aspect of it, and then there's how do I want to claim on my tax return. So I have a personal tax return. Warren Buffett has a personal tax return. He pays himself $100,000 a year, but the amount of income that his corporation brings in is billions, but he doesn't pay himself billions of dollars. He has an appreciation of the stock that he owns in Berkshire Hathaway, which means his wealth increases, but not his taxation. So he gets taxed on only $100,000 a year. That makes sense? So before you jump into anything, this is a shorty video, take a look at all the options. The C Corporation, which I use, and the advantages I just explained, LLC, limited liability company, sole proprietorship, and you can have the S Corporation. There's also partnerships too. I can't comment on that because I'm not really sure, and usually lawyers are inside partnerships, and there's reasons for that, but I can't elaborate on it. This is Mike Addis. Thanks for joining me on what kind of entity you should set up. Don't forget to do research on your own. And we'll see you on the next video. Please hit that subscriber button before you go. Thanks again.